Hi friends, in this video I'm going to discuss an illustration related to merger strategy. So everyone knows what merger is. Uh, when one or more companies may merge with an existing company or they merge to form a new company. The Indian Companies Act 1956 and the Income Tax Act of 1961 use the term amalgamation instead of merger. So merger may take two forms, merger through absorption and merger through consolidation. In a merger, there's a complete transfer of the assets and liabilities as well as shareholders' interest and business of the acquiring company to the merged company. Before that, we need to know that what is swap ratio before explaining the illustration. So swap ratio I have already written here. Uh, It is the ratio in which an acquiring company will offer its own shares in exchange for the target company's shares during a merger or acquisition. For example, if there is a company A and a company B. So here this A company decides to merge or acquire the company B. So in a merger, the acquiring company has to make a payment to the company being acquired. It is also called target company. This A company is going to acquire B company. So this A company has to make a payment to the company being acquired or make payment to the target company. This payment can be made in the form of cash or shares. If it is in the form of share, we need to find the swap ratio. So once again I'll read this. It is the ratio in which an acquiring company will offer its own shares in exchange for the target company's shares during a merger or acquisition. Here we already took the example of A and B. For example, the exchange ratio here is 1 is to 2. It means a company offers one share of its stock for every two shares of company B, which means for every two shares of shareholders of target company, that is B Limited, would receive one share of A company. So for every, if the swap ratio is 1 is to 2, for every two shares of shareholders of company B, which is the target company, would receive one share of company A. So here company A is making the payment in the form of shares. So I'll explain this swap ratio related illustration in another video. Um, The swap ratio can be find in different through different ways. Through we can find it through EPS or market price, net asset value method, etc. So here I am going to explain an illustration to find the EPS of a merged firm, market price of the merged firm before and after the merger, etc. So let's go through the illustration. This is the question. I'll read this. A Limited want to acquire T Limited by exchanging 0.5 of its share for each share of T Limited. So here the exchange ratio is 0.5 is to 1. For every share of for each share of T Limited, A would for every two shares of this T is the target company here. T Limited, they would receive one share of company, not one, 0.5 share of company A Limited. Uh, Here the relevant financial data, we can look at this. Earning after taxes given for both the companies A Limited and T Limited. How we can find earnings after tax? That is the way to find earnings after tax. Sales minus variable cost, then we'll get contribution. Then fixed cost minus contribution minus fixed cost will get EBIT, which means earning before interest and tax. Minus interest will get EBT, which means earnings before tax minus tax, EAT. That's earning after tax. So earnings after tax of both the companies is given. For company A Limited it's 18 lakhs. For company T Limited it's 3 lakh 60,000. Equity shares outstanding, which means the equity shares before merger. This is 6 lakhs for A limited and 1 lakh 80,000 for T limited. Then market price per share is given. Rupees 13 for each shares for in A limited and rupees 14 for each shares in T limited. Here uh, EPS is already given in the question. How can we find EPS if it is not given? EPS is earnings available to equity shareholders divided by number of shares. So it is earnings available to equity shareholders is 18 lakhs. So 18 lakhs divided by 6 lakhs will get 3. Uh, for T limited, 3 lakh 60,000 divided by 1 lakh 80,000 will get 2. So it is already given in the question. If it is not given and if they asked what is the EPS before a merger, we should find EPS through this like this. And PE ratio is given 10 and 7. So the question is, what is the number of equity shares required to be issued by A Limited for acquisition of T Limited? This we already know that this A Limited is the acquiring company and T Limited is the target company. So what is the number of equity shares required to be issued by A Limited for to T Limited? So we already discussed they need to, this acquiring company need to make a payment in the form of cash or shares. So in this question they are making in the form making payment in the form of shares. So how can we find this? What is the number of equity shares to be issued? We already know that then 0.5. It is already given in the question. So number of shares issued by A Limited for every one share of T Limited, 0.5. It is already given in the question. Then how can we find total number of shares to be issued by A Limited to shareholders of T Limited? This is the number of shares in T Limited is already given in the question. Here it is. T Limited already has 1,80,000. So A Limited has to issue new shares to the shareholders of T Limited. To find that, we need to multiply the number of shares of T Limited into 0.5. We'll get 90,000 shares, which means A Limited will issue 90,000 shares to shareholders of T Limited. This is how we find the number of shares to be issued. The next question is, what is the EPS of A Limited after the acquisition? Before acquisition, the EPS is 3. We have already seen in this question. So what is the EPS of A Limited after acquisition? So after acquisition, this company's earnings will change, number of shares will change. How number of shares is changed? Because A Limited issued 90,000 extra shares, right? So they have already 6 lakh plus newly issued shares, that is 90,000 shares. Here it is given. EPS of A Limited for after acquisition, total earnings after tax, that is after merger, then total number of equity shares after merger. So what is the total earnings? It is already given in the question. Total earnings is 1 lakh 18 lakh plus 3 lakh 60,000. We will get 18 lakh plus 3 lakh 16,000 will get 2 lakh 21 lakh 60,000, and divided by total number of shares 6 lakhs plus 90,000, that is 6 lakh 90,000. We will get 3.1304. Confirm this to 21 lakh 60,000 divided by 69,000 will get 3.1304. Then the next question is, we found a new EPS of the A Limited after acquisition. So the next question is, what is the expected market price of the shares of A Limited after the acquisition? Assume PE ratio remains unchanged. So if it's a question given to find the market price of A Limited, which is an acquiring company, we need to find the new market price per share. It's already old market price is already given the question. We need to find the new market price. So here it is given that PE ratio is remain unchanged. So we have to take the PE ratio of A limited. How can we calculate this? Before that, we need to look an equation. PE ratio. PE ratio is equal to market price uh, of shares divided by EPS of share. So, in the question, we need to find market price. We already know the PE ratio, that is 10. So, 10 is equal to, we need to find market price divided by EPS also, we just found, that is 3.1304. We need to find this. So, we need to cross multiply this. It becomes 10 into 3.1304. So, MP is equal to market price, will get 31.304. I'll show the answer. EPS after acquisition 3.1304 into 10, that is PE ratio of the acquiring company, that is rupees 31.304. Then the next question is, we need to determine the market value of the merged firm. Merged firm means we need to find the market value of the entire firm. So how can we find the market value of firm? It's very simple. Market price per share, we have already find that 31.30 into total number of shares of A limited. Total number of merged firm is total number of shares, that is they have already an outstanding shares of 6 lakhs. Then they issued 19,000 shares after merger. So the total number of shares is 6 lakh 90,000. So the market value of the merged firm is 2 crore 15 lakhs 99,760. This is the market value of the merged firm. So the question will be for most of the questions related to merger strategy, they'll ask what is the EPS before merger, after merger, then what is the PE ratio, what is the market price if PE ratio is changed from this to this. So we can expect that kinds of question. So I'll explain how to find the swap ratio, the number of shares in another video. We can find swap ratio through different ways, like through EPS, market price, net asset value. We can find swap ratio. So in next video, I'll explain how to find this through this ways, and how to solve a problem related to merger strategy. Thank you.